Okay, guys, I'm going to break down the 5 out of 6 bullish DEVISE clearance we saw near SPX 6000 yesterday. And bear with me here again, this is the second one of these videos, so they'll probably get a little better as time goes on, but gotta put the hours in just like trading. So, anyways, the first type of divergence we saw, so we've been watching, and if you're a reader of the newsletter, if you're not, by the way, go subscribe, retailtrading.com. We've seen a lot of CVD divergence as of late. And yesterday we saw my preferred divergence actually, which is called hidden RSI divergence. So if you look on the left-hand chart there, that is the 15-minute chart. I also look at the hourly chart. Yesterday's was on the 15-minute chart. So what hidden RSI divergence is a fancy way to say that price showed signs of a higher low as RSI made a lower low. And just to point that out on here, you saw the lower low in RSI here, but it's obviously a higher loan price. So that was very clear hidden RSI divergence there. You then saw exhaustion, which is when the aggressive selling occurred as price tested 6028. 6028 was SPX 6000. I actually got that wrong in the newsletter. I said 6020, so I was 8 points off. I guess I need to learn how to do some basic addition and subtraction. In any case, you saw that perfect bounce there, 6028. That was SPX 6000. And so just to break down what I mean by a perfect bounce, so you saw aggressive selling. Again, we had a bit of a lackadaisical power hour. So what I mean by aggressive selling is just you can see that in the delta gradient. So oftentimes those will be much red. There'll be a lot more red and a lot more action. But again, it's pretty lackadaisical yesterday. So you saw that divergence into price. That's what these bars here, those light red bars. You saw that into the level. You saw us hit the level, and then you saw right here, these are a little more aggressive on the buy side, and then again here, and then finally here, this is where you would had your entry. We'll get to that later in the breakdown here. But then you saw the aggressive push in and aggressive push out, so delta in, delta out, and that will be confirmed as we go again later in the DEVISE here. But the exhaustion is that aggressive selling going into the level, and then you saw volume spike. So we go into the level, volume spikes, and then it stalls. So you see the spike here, you see the stall. Again, there are more components of this we'll get into in just a second. And then you saw the initiation out. So divergence, we got that. That's a D. Exhaustion, aggressive delta in, and stall. That's the exhaustion. Potential exhaustion, obviously, these do not always work. And then so we're looking for the next component, which is volume. And that's what I was just talking about there with the buyers pushing back aggressively, confirmed by the delta gradient. You can see it goes from red, green, green, and then finally this 4-bar fractal. That's a fancy way again of saying that the fourth bar clears the high or low, in this case the high because we're looking for a long trade of the prior three. So the fourth bar is a fourth bar fractal higher. So yeah, so that during that volume move there, so you got the divergence, exhaustion, volume. The I for initiation is very simply price initiated from that 6028 level by 0.25n, which I think is something like 3. So I will kind of, what I used to do is I used to require that full 0.5n, but what I like now is I have a three entries. So that first entry I'll be almost subjective about it. That second I wait for the 4-bar fractal, and then that third I'm looking for 0.5n of initiation. So just to get that perfect quote unquote entry in, you just need 0.25, and you saw that. Really, actually, wow, 6028 to 6036. So you got that full 0.5. So that's what the initiation is. Sponge is just, again, it's a component of this little pattern here, the delta in. You see absorption at that low, and that means pausing an area of high liquidity. These levels are areas of high liquidity just by nature of what the levels they are. SPX 6000 obviously has high liquidity, and you're looking for buyers to reinforce the bid. You saw that in the DOM, but that's also showing in the candle structures here. And so then a sponge occurred when there's more liquidity than interest in further downside. So that's also confirmed with that tight cluster of price candles. Then finally excess. So you see excess in the wick. So you saw the volume taper as we discussed, and you saw the wicks on the price candles. Yet for me, I'm not including this. It's a 5 out of 6 DEVISE signal. Yesterday, I do not see this as a full 6 out of 6 because this micro excess, yes, you're seeing wicks and stuff, but if you're looking at where we are in the profile, I'm just going to zoom up here a little bit. You can see we're between the POC and value area high. So by no means is this excess in the profile itself. So I'm just pointing out what excess is there. is defined by the volume taper and wicks, but due to the position on the profile, I'm not including this as part of yesterday's DEVISE clearance. So there you have it. I'll break everything down in words in the newsletter, but that is a optimal entry from yesterday and just another example of DEVISE clearance.